Welcome, everybody, to the webinar, New Geopolitical Realities of a Multipolar World. Which country pops first? So when we talk about geopolitics, well, here we are referring it directly, right, to trading and in investing, because this is what we are interested in. In the past, actually last year, one second, I have to just reorganize a little bit. Actually, last year we talked about economics as well, and things are reinforcing and actually getting worse and worse. So it's interesting to think about which country pops first, right? Today, it's not only actually about economics, we're actually adding new dimension. It's politics and military. Both have a very important impact on the capital markets. It's not like they haven't been important before, right? I mean, these three things have been important under the Biden and Obama administration, for example. But now it becomes more obvious with Trump. If you want to say so, it's more honest and blunt, and it has more impact on the markets. And we're actually shedding a light on that. And the idea is to as well look at the bubble in your head, whether we have some ahas that can be triggered here. That's actually one of the goals here. And whether we can pop some bubbles. Understand it's very confusing, right? What's going on? Economics, macroeconomics in the world, what's going with politics and military as well. And we're actually trying to clear the fog to make sense out of all this and as well to be prepared of what might come next and what impact it actually has on the capital markets. So today, we're basically talking about, we're talking as well about long-term opportunities. With that, we refer to this year and the next 10 years ahead, the big picture, basically. We look at which countries are the big winners and the big losers in this decade, and then how to trade this shift of geopolitics. And in the end, well, we're opening up, right, for Q&A. All right, so let's start. This is the topic of the webinar. This is the bubble, and we're trying to pop a bubble like that in your head as well to clear the fog. So let's first talk about economics. So is the US the first country to pop the bubble? Because there's a lot of talk about, right, the huge amount of debt there is in the US, etc. I can tell you right in the beginning, I don't think that it is the US. This is the US federal debt. It's rising basically as in any other country. And these are the bond yields. Actually, bond yields are more important. That's the interest you pay on the debt, right? Yields are much more important than the whole amount of debt that is accumulated. In the US, it's still under control, right? And even the US federal debt could actually be stabilized over the last year. But what is important? One is multiplied by the other, and that has a bigger leverage, the yield, right? And here the Economist has actually stated it nicely in one of its articles, the budget bust up. Forget the shutdown. America's real fiscal worry is rising bond yields. Well, that is true, right? This is a time bomb ticking, but it's actually not the US, which is the biggest problem. It's actually the least problematic, what I think. If we compare the US, what we have here is the debt, government debt versus GDP. And we can see here the US is slightly above 100% debt per GDP, and Japan is much, much worse, right? It's above 250%. Well, that's a big gap. And the real time bomb is actually with Japan, especially if you think about what happened last week. We had, I don't know if you have read it, but the Japanese government bond yields, they have been spiking to historic highs just this last week, or was it this week? So the real time bomb is actually with Japan. Let's have a look now at a 1 minute video I wanted to show you about the debt bubble in general, because it has an impact, right, on the capital markets, and we can actually use it to our advantage. So let's have a look at at that.
Government borrowing is the biggest issue in finance today.
Governments around the world are addicted to debt.
Sovereign debt levels globally have just grown exponentially.
In the case of the developed countries, the average ratio of public debt to GDP is now back to where it was in 1945. That's rather striking.
It's politically impossible to solve.
Exploding debt is a real worry. If you're an investor, you start wondering what's going to happen and whether there's going to be debt default.
The music stops when you get a major crisis.
The big question is, at what point does the bond market break? I think bond investors should be terrified.
Okay, that was a quick intro to a documentary from the Financial Times. I'm just posting that here in the chat. It's a 1 hour, 1.5 hour. It's actually interesting to look at it. So they don't put a lot of focus on Japan. Well, this is what we're actually doing. What we're actually doing here now. So let's share again my slides. Okay. All right, so what do we have here? Well, yields are up, 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 and that's what we've seen here just recently. So yields, we can see, well, let's just bring that up here. So that's from 2000. This is the from the Japanese Japanese government bond yields of the 30-year bonds. And it goes from 2000 to 2024. We've actually seen, I don't have the actual graph, but over the last week, we see a spike into the bubble. We see a huge spike here, right? And it's currently Japanese government bond yields surged sharply across multiple maturities. The 30-year bond yield reaching 3.9R. This is this one here, the 30-year bond yield, the highest level in Japan's history. The 40-year bond yield at 4.2%, also a record high. Even the short-term 10-year bond yield rose to 2.4%, a level not seen since about 30 years. What actually happened here this week was the market completely dried up. There were no buyers of Japanese government bonds, and that means a loss in confidence. If there are no buyers, well, the price of the bond goes up and the yield goes down and the yield goes up to attract buyers. But it was completely dried out. Now, this is in news from this week. Japanese bond yields have soared to record highs, pushing up government borrowing costs around the world. So we can actually see that there was an impact, right? Not only on the Japanese government bond, but on other bond markets. Finance Minister Satsuki Kataima said, I'd like everyone in the markets to calm down. So things are really, starting to get interesting, right? Let's have a look at, so this is the yield. Well, let's have a look at this mountain of government debt in Japan. Well, obviously, as basically with all other countries, it's rising, right? The mountain is rising, and it's at record highs as well in 2025. Well, the problem comes if the yields go up, because then the servicing of these debts goes up as well, and then there's this budget problematic and the loss in confidence. So what we can actually say, especially here with these recent developments, the ultra loose monetary policy that Japan has done for, I think it's like for 20 years or even 30 years, it's basically over. We're looking at that the debt is monetized by the state. They have been tried to keep it very low, the yields at 0%. Well, it's actually nice to have a big pile of debt and not pay any yields, right? In some countries, it was even negative. Well, this is no longer positive. This is no longer possible. There was a transition period here, and now we're actually going in the opposite direction, right? Let's have a look now. Well, let's have a closer look at Japan. These were just like the numbers. Well, let's have a look a little bit coming from the history and whether Japan could pop and when it would pop and why. Let's have a look at that. So Japanese stock market bubbled. You might remember. Well, I was a kid back then. I traded that, right? The rise in the Japanese stock market. It peaked in 1989, and it only made a new high in 2024. So 35 years later, it took so long to make a new high. That is quite interesting. There was a huge bubble. And then a couple of years later, 1992, there was this real estate bubble, right, in Japan. And since then, they could actually never recover from that. We saw very sluggish growth. Government lowered interest rates actually back to zero in 1999. So that's a long time, 26 years ago. And they started with quantitative easing back then in 2000, 2001. It's not only something that started with the great financial crisis, right, in 2008. Well, everybody did it, but Japan started much earlier than that. So since then, Japan is in a slow decline. And Japan's bond market is actually one of the largest in the world. This is why it has an impact on other bond markets. Now, in 2013 was the start of Abenomics under the Prime Minister Shinzo Abe. He introduced a very aggressive monetary easing with government and the Bank of Japan, like the central bank there, working together hand in hand. And there was talk about financing of the state, basically printing money, right? And with that printed money, buying government bonds to keep yields low. I remember really well when Abe was interviewed and he was asked this question, and he basically said something like that. We are not financing the state. If we would see it with the interest rates. So we would see it when the interest rates go up. Well, it was clear that this is not going to work out well, right? Well, it took 13 years, and we're back. We're actually here now that the interest rates are going up, and we can clearly see that Japan is financing the state. Back then, 2013, it was started very aggressively, negative interest rate policy and yield curve control. So they try to completely control, right, the economics. 2022, Bank of Japan announced the purchase of unlimited amounts of JGBs, government bonds, and even tried to cap the yield of the 10-year bond. Well, that didn't work well, right? Actually, nowadays, the Bank of Japan, the central bank, owns more than 50% of the Japanese government bonds. Well, they bought that through aggressive quantitative easing programs. And domestic institutions, including pension funds, own another 40%. So 90% of Japanese government bonds are domestically held. Only 10% are foreigners. Well, this is why I think they're able to keep it running for so long. Because if they had like 90% foreign holdings, the bond market would get under pressure much earlier. There's still a lot of confidence, right? I mean, that's as well the culture of the Japanese that they trust, and they have a lot of confidence in their country, which is a good thing, right? In general, but not without an end. Now, the system fully relies on the domestic confidence. Japan may be isolated from foreign capital flights, but not from domestic capital flights. If that happens, well, the Japanese bond markets will get into trouble, and it will have a spillover effect on other bond markets because it's one of the biggest in the world. So basically, the Bank of Japan is trapped. If it raises interest rates, well, it would actually need to do now as the rates in the markets are increases. Not only will the interest expenditures skyrocket because they have to service the debt and the government, but all previous issued bonds will lose tremendously in value. So if the yield goes up, well, bonds are losing value, and pension funds are invested in Japanese bonds. The Bank of Japan holds, right, 50% of the bonds. Well, if they analyze their balance sheet, well, they have to depreciate those bonds, right, to current levels of pricing. So they will have a big loss in their balance sheet, similar to what we saw actually with the Swiss National Bank. in Switzerland, when they actually pegged the Swiss to the euro, we saw something similar, a very strong impact on their balance sheet. Japan is very vulnerable to a sudden and eventual loss in confidence. So it's all about confidence, right? I mean, numbers are fine, but as long as confidence stays high, as it has been over the last 30 years, things continue to roll. When there's a loss in confidence, things might turn pretty quickly bad. When it comes, it will appear as if a volcano had erupted out of nowhere. When the confidence will turn around, that's very difficult to predict. Similar like other things in the financial field, like inflation as well. But it will flip at some point in time, right? The final loss in confidence could actually be triggered by war. We see a lot of war going on, right, around the world. For example, NATO has been trying to push Japan. Very few people know that. Have been trying to push Japan to closely partner up to control the Asia Pacific region. There was even talk for Japan to join NATO. And then there was talk about a close relationship. So there's actually this trying to control, right, the Asia Pacific region through the NATO. And all this is not helping confidence, especially with the Japanese. They have this history from the Second World War with the atomic bombs. They are very, very sensitive what military and war is concerned. So the question now is, are we witnessing now here, since a week, the start of a sovereign debt default? Japan, right? Is the debt bubble going to burst? We don't know when. I strongly believe Japan will actually be the one that everything starts with. We'll see. If they get into trouble, or any other country, the first question will be, who's going to be next? Do you remember Great Financial Crisis 2008? That was the question, right? Who's next? Who's next? And the market is going to attack the next weaker one, right? Who's next? Well, who's next? We don't know. It could be France, it could be the UK, Italy, or even Germany. It does not look good looking at the economics in Europe. And if Germany falls in Europe, well, the whole Eurozone will tumble, right? So this is the risk a little bit with the sovereign debt crisis. It starts with one country, and then it basically, similar to the Great Financial Crisis, and then it starts to bite its way, right, from one country to another, and it might accelerate as well. Obviously, there will be programs to stop it, and in any way, it will add volatility, right? Events like that. And we're interested in trading the markets. And volatility is a trader's best friend, right? So if that happens, we can actually not be happy for the overall situation, but we can capitalize on it, right? Trading the markets or investing with the markets. And the Forex market, crypto, and the futures markets, because they're 24-hour markets, are actually ideal to trade because you don't have this gap risk from one day to another day. So this is the spiral, right? I actually thought it might start with Argentina or maybe Turkey. No, I'm pretty convinced it should be Japan, and it will eat its way to the core. So what is the core? Well, the core is actually the US. It's not the first to pop. It's actually the last to pop. It's the last man standing. Why? Well, because the economic power of the world is in the US. And if there's a problem, money will actually rush to the US because it's the only market that is deep enough to actually hold large amounts of capital, right? Switzerland is an interesting safe haven, but it's much too small to keep enormous amounts of money if they get out of government bonds. So the US will not be the first to fall. This de-dollarization theory, there's a lot of talk about that, right? I don't think it's true. There's no real alternative to the US dollar. It is the most liquid market to park money. It's the world reserve currency. It is a safe haven currency, despite the debt levels there are. And well, as the pressure builds up, and we're talking about not tomorrow, right? Not in a year. Because whenever I hold this webinar once a year, I actually get 2, 3 nasty emails from people who are really angry about me because I'm talking about these things, right? I'm steering a little bit of fear, but it's actually not something we're looking for here happening overnight or in a month or in a year. This is a process that should actually take like 10 years, I would say. According to cycle studies, the big cycle ends in 2035. And I believe this will basically be the end point or the worst, the worst, debt bubble crisis. So there's basically 10 years to work, right, with this and to trade volatility. Well, because of this pressure and this 10-year time frame, well, we came up with this idea of the big currency shifts. And we can actually see them, right? Every year there's more confirmation, money shifting from the weak currencies. Actually, the weakest currency we observe of the top 30 is the yen since several years. And it goes into the strongest currency, and it's actually the Swiss franc. I'm going to show you an overview with an updated version. And we've got the super cycle trends. Everybody knows about precious metals, right? The silver has just spiked the $100 per ounce and others. Well, the metals is just one asset class. It's basically doing its work. There will be other asset classes coming forward. We'll see again energies. This is what we call the super cycle trends. Every asset class will go into a historic bull trend, and that's supported by the debt bubble burst. Money flows slowly and steadily out of the government bonds bubble, and it looks for a safe haven. Well, it's hard assets, right? And hard assets is precious metals. It's as well stocks. It's as well energies and even cryptocurrencies, Bitcoin, right? It's something that supposedly keeps value if you compare it with a government bond when there's a further loss in confidence. Now, this is an interesting chart. That's the US dollar versus the yen. And that's a very long chart. It goes from 1997 to 2026. And we have actually seen here, so if the chart goes up, that means the yen gets weaker and the dollar gets stronger. And we've seen it since like 13 years, right? From down here to up here. So the yen lost tremendously in value. So what we see here, the debt problems, well, the charts already told us well in advance, right? And actually, in our community, we only look at the charts, but once a year, we look at fundamentals as well. That's what we do today to understand the overall big picture. What we see here is, and that was confirmed by Reuters, the Bank of Japan, they were intervening against the yen breaking apart. So they were basically buying back yen and keeping it not devaluating even more. We had it here, and here. They are basically trying to keep that level of 150, and that is a historic level. That was back here as well. We had another central bank intervention 27 years ago during the Asian financial crisis. The Bank of Japan, very obviously, were actually trying to defend that level. Well, how does it look like? Are they successful? Well, not very much, right? If you only look at the chart, we actually don't see that the yen is getting stronger. It bounces off the blue line, the 21 moving average, which is just normal price action. And we are now here again at this high. And I'm observing this level. If it breaks this high, if it breaks this high, well, that means that the trouble is coming, right, for Japan. If they cannot keep it below this dominant high, this is the stop run level. Well, then we have locked in the target of 200. That's a big move, right? And if that happens, that's a big devaluation. I mean, even more trouble on the horizon. The nice thing is we can see trouble that reflects in fundamentals well before you can read about in the press. This was a very clear S1 pattern back here that has triggered a very low risk idea. When was that? In 2021. So that was basically during the COVID crisis, right? And what is this? Well, that's a stop run move, taking out these highs. Right? So something serious is going on. That's what we can read about only looking at the chart. Okay. Right. Eric, let's have a look at your question. What does it mean, yield curve control? How is that done? Well, the yield curve is like this, right? And they're basically trying to keep it flat. I'm not an expert in yield curve control, but they're trying to moderate, right, the yields of different maturities to keep it ideal to what they like to see, not what the market basically prints, but what they would like to see. Yeah, so 2035 could be the worst, or it could be the worst. I think so, or it could be when basically it's over, right? When we start from new, which might not be a bad thing either, right? Right, so let's have a look now. What are the opportunities? Big currency shifts and the super cycle trends. Just updated that. We're not spending too much time on that. There will be another webinar. But again, the Swiss franc is the strongest currency of all of them, and the Japanese yen remains the weakest of all of them. Well, we know why, right? And then we've got other currencies. Top four are these. Bottom four are these. Actually, the US dollar is a swing factor. It could be up here, or it could actually flip down to the bottom. We could find it in the weakest currencies. It's very unpredictable. But what we know is that there will be big moves, and the big move happens, well, from the weakest currencies to the strongest currencies. This is what prints the trend, right? If you combine a weak with a strong currency, it's either an uptrend or a strong downtrend. And the patterns we trade work really good in trending markets. The stronger they trend, the better actually the patterns work. Well, this is what I've showed last year, in January last year, exactly this one. We had mapped out the target is up here at the 200. That's another S1 pattern. And what happened? Now we've got January 2026. This is when we looked at here last year, where we actually saw that it was not over yet, the move. So that was foreseen in the chart. And what we got here, well, is another pattern. The very same pattern, system one, but one time frame lower. This is a monthly chart, so this pattern formed on a weekly chart. What we see here, again, these are stop and moves, right? Triggered by the differences of strong and weak currencies. Now, super cycle trends, well, we look at the futures markets. We don't have a good composite to look at the futures markets that basically brings together all asset classes. The best I came up with, it's a CRB, commodity index, and we can actually see how it has made a first leg, right? Since the corona spike low, 2020, that marks the low, and the high, interesting to see. Well, that's a great financial crisis high before it dropped. So these extremes, and I think if we look back like in 50 years, in 20 years, if we look back, these two events will be very important events, right, in history. The corona drop low and the great financial crisis high. And what we see here has developed, again, this is a pattern on a quarterly chart. When I saw this pattern, well, there was this sell-off, right, during the corona low, and then there was the re-break of this horizontal line. And here I understood something dramatically changed, right? Now we have started a commodity bull market. And if you look at this pattern, just from the charting perspective, actually the target is up here. That's a 10 bagger from this level. And if an index goes up times 10, I mean, you can imagine what happens with individual asset classes or contracts. Well, we currently see it with silver, right? We saw it with gold last year. Platinum as well has started to move end of last year. We're actually going to see, I'm very much convinced, whatever asset class, whatever symbol you look at, it will get into a major bull market into the year 2035. And there will be many opportunities, right? These are stop run levels. So, and even with this metal bull, we don't see a lot of impact yet. If the others start to move, well, then the whole index will actually start to become with a lot of will develop a lot of follow through. So good potential. Let's have a look just at silver. At last year's webinar, January 2025, I showed that chart, silver. That was actually the one of the top 3 trends for the year, for this last year. Silver at this level. Why did I pick that? Well, because it's clustered with patterns. This is a pattern. This is one, double pressure, and we've got all these stop run levels. So there was this potential that we actually start to run, develop follow through, and we've produced a stop run move. Well, it develops a slingshot move, and that is an exponential rise in price, right? Sometimes stronger, sometimes not that strong. Well, what we see here in silver, that's January 2026. Well, it actually made a rise, a vertical rise like that, right? Touching the $100 per ounce. Well, that is a stop run move. That's a very strong stop run move. Sometimes they happen that strongly. That's the ideal scenario. And those that have been positioned in the community are actually very happy, right? This trade alone made me again financial free, right? I'm heavily invested in physical silver since actually here, just before the crisis. And that was a nice move. We've got somebody else in the community who traded this move with options, and he tenfolded his account as well, became financially independent. Okay, let's talk about new things I never talked about, especially not in bigger groups like this, only with friends. Let's talk about politics, well, especially geopolitics. If you think that politics can be at times a dirty business, well, geopolitics is much, much worse, right? It's not necessarily nice to talk about that, but it's actually necessary to clear the fog, because we have to understand what is going on. I was confused quite a bit, but I've organized everything in my head. It's important to trade well, right? Not being confused, not being overwhelmed, not being stressed. Only then can you trade with commitment and with a good mental state. So what happened? First politics, then military. I think the shift to a multipolar world, it's done, right? Since 2025, it has happened. The USA is no longer the unicentric, dominant country in the world. Let's have a look at that now. Since World War II, the US dominated the world. Before it was UK, right? The US took over from the UK. And since World War II, US dominated the world, shaping it in a multipolar way. Economy, politics, military, even social, music, clothes, right? Products, whatever. It was their country, everybody was looking at, right? Now, when Trump came to power, he's coming up with "Make America Great Again." Well, what does that mean? Well, it means about bringing back the power to the US. He understood, and many others obviously, that the US is not in a good position, right? And now it's about, well, let's try to regain ground and become again into a very strong and good position. Now, is the US still having the cards? Trump likes to talk about who's having the cards, right? Do they have it or do they not have it? Well, I think only partly. This is why we have geopolitical turbulences we're seeing right now in all ends, right? Ukraine, Venezuela, Iran, Israel. It's all confusing, but I think important is really to shift the thinking. And for me personally, I mean, the turning moment is April 2025 when Trump announced the U.S. tariffs. He was basically putting tariffs on the whole world, right? Well, to the advantage of the U.S., obviously. He thought he had the cards, right, and could basically suck money, bring companies back to the U.S., right, and put him into a good position, not only financially but anything else, right? He tried to come up again and basically guarantee the U.S. to be a unipolar country for the next 50 years, right? That was the goal. But I think it failed. It marks the end of unipolarity. Why? Well, if you look what happened, I mean, it was a big shock, right? But interesting was how did the countries actually react? If you look at Japan, they bowed down very quickly. They accepted whatever, right? Why? Well, they're heavily dependent on military support from the US. What about Europe? What happened with them? Well, first they tried to show strength, and they wanted to put up as well counter terrorists. And when von der Leyen met with Trump, well, she had readily accepted what Trump wanted. So as well, they bowed down. Why? Well, we read in the news afterwards. Well, because Trump threatened he would leave NATO, and that was a clear no-go for Europe, right? So they accepted. They bowed down. What about China? Everybody knows about that, right? One raised a terrorist, the other country raised terrorists. I think we went up to 250% on both sides. They did not bow down. Why? Well, because they know they have the economic strength and they have the military power. And not only that, they have other layers that probably Trump was not aware of, and they're playing their cards now. China, they have, I mean, they are limiting rare earth export to the U.S. First, they said no exports at all to the world, well, including the U.S., and then they said, okay, we will export a limited amount for only 1 year, and then we will revise again. Well, that's a lot of pressure. So why are these important rare earths? And basically, China has a monopoly. I think 95% comes from there because rare earths are needed to produce military, right? Military products. And we are basically in a decade of conflict. Well, if the US cannot produce anymore their military equipment, well, they're in trouble, right? So with this respect, China has the cards. That's what he understood. And then suddenly, without much noise, without reading much about it, the tariffs were lowered, right? Trump tried to crunch them, China. Well, it didn't happen. They didn't bow down. And what we see as well is that China and even India, they've got an export stop on silver. I'm not sure if that's the reason for this exponential rise in silver. The truth will come out at some time. We haven't seen it yet, but this could be another reason, right? They're putting on basically the screws, right, on the thumbs, and they're showing their power, right? Same with India, biggest population. They're part of BRICS, and they're forming. I mean, they're allies, right? India with China, Russia, and other countries. That's quite a strong conglomerate. Russia with the military power. That was not even in the focus, right? For terrorists. Well, that's interesting. That's interesting too. So now, how do geopolitics function? And if you make that clear, or when I made that clear to myself, I mean, the fog was basically gone. It's very comparable to competing street clans, or you can even call it mafia clans, right? Who are showing where strength determines who leads, controls, and dominates. If you think that politics or geopolitics, if you think that politics is about a human, is about democracy and humanity. Well, it's not, right? It's about who is stronger and who can force his will on others. When we talk about military, we see more of that. I think Trump understood he has not the cards anymore. With some countries, yes, but not with the most important countries, right? China is the main competitor economically. Russia is the main competitor military-wise. He has not the cards with those two important, powerful countries. So what's going to happen now? Well, obviously, he's scared, right? He has understood that there are opponents that are equally strong than him, and who knows who's going to win in the end. He's scared, not for himself, well, for the US, right? Make America great again. And this is why he is thrashing around, right? And why these conflicts are coming up in the world, right? These crazy things, no cards. I think there's fear of survival in the Trump administration, and they're fearing Russia and they're fearing China, their main enemies. I'm deeply convinced when taking out, I mean, the coup in Venezuela was not for the oil. That's what you read everywhere. Well, it's for national security. Greenland, the same thing. Well, he mentioned it, that it's for national security. Who is next? Well, I think it's Cuba. So why is that? Venezuela is so far away, right? No, it's actually not. It's very comparable to 1962, the Cuba crisis, when Russia wanted to install nuclear missiles in Cuba, right? Not too far away from Florida. And back then, well, we were close to a war. And something similar is happening now with Venezuela, for example. Trump was scared because Venezuela is a Russian and a Chinese client state, right? Russia has already installed these missiles, Oreshnik, nuclear missiles in Belarus, right? The country next to the US. So he started the process. And Trump was fearful that something again would happen, I'm pretty sure. Because if you install the Oreshnik in Venezuela, it will reach the US in less than 20 minutes. Same if you install it in Greenland in less than 20 minutes. And that's a big national security problem, right? And a little bit later, he was talking about pushing up military spending by 50%. Well, he wouldn't do that if he were thinking that the US military is the strongest in the world and that nobody could ever threaten it. 50%, right? Well, what happens with that? Well, again, it's more uncertainty, it's more liquidity, excess liquidity, and more volatility. It actually helps traders. And the more surprising geopolitical events we might get, well, more uncertainty, right? And I'm pretty sure we will get more because Trump talked about it. He wants to clear the US neighborhood. Cuba is very close, obviously, and other countries too. He will do. We talk about geopolitics because the curtain has fallen, right? Whatever he can do to gain an advantage against Russia and China, he will do. And we see it now, the discussion with Greenland, right? Which is actually absurd. But if you think about that, he fears national security, it makes all the sense, right? Interesting to watch here these statistics. Whereas China is in a power play. If we look at this GDP growth between 2000 and 2020, and we look what are the top countries in this 20-year period, it's China, 1,300%, Russia, 500%, India, Brazil, well, all these are part of the BRICS, right? So we can already see the BRICS conglomerate. They are very powerful economically. And here, Germany, France, Italy, US, it's basically in the middle field, right? So economically, BRICS and China, they're the rising stars. Interesting as well when I read this news, because Trump was about to attack Iran again, right? When was that? Like 2-3 weeks ago. And then nothing happened. And he said, well, Iran did something, they didn't kill 800 people, and that's why it didn't attack. Well, I think that's a good excuse if you read this news. China says it will support Iran against the US if there's a war between them. If the US attacks Iran, China has taken sides, right? China will support Iran. And if China supports Iran, because Russia, they have something similar than NATO, they have an agreement like that. Well, Russia is right next to it, right? So he understood he cannot do what he wants anymore, right? Let's have a look at the military view. Is the US still the strongest military power in the world? Well, they have been for long the strongest power. But when Trump says he wants to increase military spending by 50%, well, something is wrong with that statement, right? For many years, NATO, right, was pushing forward, and what they call it actually the nuclear sharing program. Well, the US has the atomic bombs and was about nuclear sharing with other countries, European countries. So, for example, US nuclear missiles are stationed in Germany, Italy, Belgium, Netherlands, and Turkey. So it's kind of the outer ring around Russia. And there was talk about including as well Poland and Romania, which are neighboring states to Russia. Then in 2008, that was under Bush Jr. administration, there was this talk about official talk about for Ukraine and Georgia to join NATO. And these are neighboring states to Russia, right? Well, Russia, obviously knowing about the nuclear sharing program, wasn't worried about nuclear missiles stationed in these countries, same as Cuba, right back then in 1962, and they said no, we will not do that. And Germany and some other country, which is part of NATO, they said no, we're not allowing Ukraine and Georgia joining, and then it was off the table, right? But that was basically the red line for Russia, and it's very similar to the Cuba crisis. So basically, if we think from a geopolitical perspective, right, what the US wanted to have, they wanted to have the first strike capability, meaning that they can attack, let's say, well, the biggest military enemy is Russia, right? They wanted this capability to attack, being able to attack it, and then have a shield, right? If they counterattack. And this defensive missile shield was actually implemented in Poland and Romania. It's called Aegis. And the doctrine is called Sword and Shields doctrine, right? So be able to attack and not suffer any consequences. Well, it's obviously nice to have, because if that was the case, I mean, you could do with Russia whatever you wanted, right? You could put pressure on them, let them sign contracts in your favor, etc. Well, Russia was scared, right? And what happened? What did they do? Well, they developed technology, right? For national security. They were scared, similar than Trump is scared nowadays. So I think, I'm not a military expert, but I think Russia is the military leader in military technology nowadays. When we talk about missiles, right, they've got this Worsening missile. It's hypersonic, intermediate range, maneuverable. It's a ballistic missile, more than Mach 10. That's more than 1,200 kilometers per hour. It's very fast. It's maneuverable, and it cannot be intercepted by nobody in the world, right? So Oreshnik is basically the leading missile, and that got implemented in Belarus. And I think, and it has been tried twice in the Ukraine war. Everybody was scared when it happened, right? And Trump is fearful of something like that getting implemented in Venezuela or in Greenland, because he cannot do anything against it. That would shift the power play, right? And they as well have the avant-garde with this a hypersonic glider, 25 Mach. So these are powerful things, and apparently they're 5 years ahead of the US in this technology. And such a missile can go through the shield without a problem, right? Worsening can carry nuclear warheads, 5 independent nuclear warheads, and that is quite a threat, right? Not the US nor France, which is nuclear power, UK as well, nuclear power. None of those have anything to match in terms of maneuverability, hypersonic nuclear warheads. Impossible to intercept. Trump knows it. In Belarus, it got installed. He knows it as well. And this is why I think he's clearing out the neighborhood, right? Not because he's a bad person, but for national security, right? We're in that state now where everybody is fearful and everybody basically tries to survive, right? This is this shift from a unipolar world to a multipolar world. And the number one, the US doesn't want to give it, right? Without struggle. So he's clearing Venezuela, basically South America, and Greenland as well, so he can position himself. Why is the Ukraine the most important geopolitical country in the world? Well, you can read the book. I read it in 2008. It was one of the reasons why I left Europe back then. It's from Brzezinski. He was the security advisor of Jimmy Carter and any other president coming after him. He died a few years back. The Grand Chessboard. If you can read it, it's very enlightening. If we talk about Ukraine, right? Very interesting, because basically who controls Ukraine controls the whole Euro-Asian landmass, right? Eurasia, and that's very important. So China's catching up very quickly in military power. Why? Well, because they deliver Russia components for the Ukraine war, and they want something in return. Or what do they get? Well, they get know-how transfer, right? And China apparently is closing the gap with Russia this year, so they're catching up quickly. And China, because of its big size, right, and low wages, it deploys in bigger numbers and uses advanced AI. And the big threat from China is they call it swarm tech, world's most advanced drone program, drones for mass swarm attacks. It can these mass drones can fly with a mothership drone 7,000 kilometers long, and then they get dropped. Swarm tech, amazing things, incredible. So the US is no longer anymore, right? Military power number one. Trump knows it. That's why he wants to increase spending, right? Military spending by 50%. Again, that will create more volatility. It will actually create potential war and civil unrest and volatility. Well, markets move, right? Whenever we get that. So who's the big winner? Country-wise, who's the big loser? I think the big winner, especially in the long run, will be China, respectively the big BRICS countries that are basically forming a unity. China is standing tall, India as well, and the other countries, Brazil as well, they're standing tall. And these are the new realities. Capital, production, and power are migrating east, right? East, well, to China. China's 2025 trade surplus was 1.2 trillion. If you compare it with the US, on the US, where we know it's negative, it was like minus 30 billion. Europe was 120 billion, 10% of the Chinese trade surplus. Well, the biggest part comes from Germany, 110, and the year before it was 240 billion in Germany. Well, Germany is on a downward slope. That is incredible. The Chinese trade surplus of such a magnitude does not arise from a single policy, tariff, or administration's rhetoric. Decades. So we're talking about decades, right, of economic reconfiguration know-how transfer. I was in 1994. I was in China, and it basically started. It started all back then. That German companies went there, and they could only form like Lufthansa, right? The airplane company. They could only form a company there in a joint venture with China, and China wanted minimum 51% of these joint ventures. So there was a lot of know-how transfer as well, all the car makers, etc. Well, they saw the huge market opportunity. And they said, well, if we have to go know-how away, well, then we do it. And they did it. Well, China benefited a lot from that, right? Decades of economic reconfiguration to become an economic powerhouse. So China has integrated itself into the global supply chain. And when I worked in Germany, like with the biggest insurance company there in Europe, I had a friend, Jan, who worked there, and he basically said, when I asked him, what is China, what's happening, what's going on with China and the US, that was in 2008. He said, China will slowly manage down the US. And that's actually what we see, right? Slowly, subtly, very subtle, we see this shift, right? From a unipolar world to a multipolar world. And I think China will be the financial capital of the world. Nowadays, it is US. Before the US, it was London, right? Before London, I don't remember. It was some point, it was Amsterdam, Netherlands, it was Portugal, etc. It's basically moving, right? And the financial capital of the world in the future will be China. Not in 5 years, not in 10 years. I think we need a real crisis for that to happen. But out of that crisis, I think China will emerge as the financial capital. Similar to World War II, we had the crisis where the US emerged, right? So can the US terrorist deals, can they change anything, turn that around? No, we will not be able to turn that around. So who's the biggest loser? I think it's Europe. Smaller, the smallest. It's really hard to see that. They're sitting in between the chairs, right? Weak military. They've always been dependent on the US. Economics doesn't look good at all. High debt levels. Geopolitics, they're not very good with geopolitics. They are not good players. It's like balls. I mean, they're rolling around like balls in a football game. That's the impression I have. These are descending economic powers, debt bubble, demographics, migration, energy. Right? Energy now is outsourced to the US. Before they had cheap energy from Russia. Now it's cut off from Russia. Well, now they're dependent with their military and energy on the US. And Europe is a competitor, right? US, Russia, China, Europe, these are all competitors. We don't know what's going to happen with Europe, but they might get squeezed. Another big loser, I think the most immediate will be Japan when they fall off the cliff, like when the sovereign debt crisis starts to worsen. And we'll see it at the yields. We'll see it at the chart, the US yen chart, right? When the yen falls further and further, when the yields rise in the Bank of Japan, when they have to increase yields, when their debt servicing expenses, when they rise and when they get difficulties, right? That's when sovereign defaults happen. More uncertainty, excess liquidity, and more volatility. As bad as it sounds, it's actually good news, right, for traders and investors. So how to trade? The shifting geopolitical realities. Again, we're talking about a 10-year period, maybe even longer. But I think minimum 10 years. That's a long time, right? That's a big picture, basically. Government debt bubble around the world is the mother of all bubbles. When that starts to deflate, there's money looking for a safe haven, and it is safe haven are hard assets, right? Gold, silver, but anything else, real estate, stocks, right? Energies, and all those. That's why we say the whole commodity market, including the stock market, will rise, right? Driven by the money getting out of this huge government bubble. That's an enormous amount of money, plus money printed, right, to finance wars and this and that. So there will be a lot of uncertainty, excess liquidity, even potential civil unrest and war, and all that adds to volatility, and it adds to a loss in confidence, right? And loss in confidence in government bonds, well, that means interest rates will go up, and the debt bubble starts to burst. We've seen it with silver, right? Silver is basically the blueprint. Before silver, we had the blueprint was palladium a few years back. These are moves that are nothing special. They're going to happen every year, right? But in a different asset class and in a different contract. So as a trader or investor, you don't need to be a day trader. If you're an investor, you can capitalize on these moves just to protect yourself and your loved ones. Right? So great trading opportunities in all asset classes, in Forex as well, in cryptos, and all time frames, right? Yeah, flight to quality, search for the safe haven. That's basically the overall tech. Yeah. So the recommendation is most people are actually confused and stunned, and they don't understand what is going on. They're scared. And what happens if you're scared as an investor? Well, you freeze, right? And that shouldn't happen. And I mean, it helps you today to put some clarity as well, a big picture outlook, big moves will be something normal over the next 10 years. And you can capitalize on those, but it's not a buy and hold thing, right? You need an exit algorithm because silver can come back to its prior levels where the move started. It can come back to the $30. So you need an exit algorithm, right? But if you're unaware of what drives these moves, well, you cannot trade, right? You're in a very bad mental state. And these things, volatility, I'm pretty sure, and we've seen it confirmed over the years because I'm holding that webinar for 5, 6 years now already, I think. And every year it gets more confirmed. These things, they will intensify over the years. More volatility, more excess liquidity, all that drives prices, right? And what works well for us in the community is actually not caring much about the news. Well, we do it once a year with a big picture, but then we focus on the patterns, right? Because the patterns, they tell the story before the news hits the market. And we trade the patterns and we trade the trends. And in such a trending environment, well, you don't want to be a band trader, right? You want to be a trend trader. So if you know what's going on, you should actually do nicely. Trade what you see, manage your stocks. This will be a global thing, never experienced before, and unique trading opportunities for the next 10 years. That's a nice thing. And I think it has never been that easy to become financially independent before, right? You don't need to be a day trader. You can. You can be an investor and still become financially independent, right? Be it with cryptos, be it with Forex, be it with futures trading or investing. And because I always get nasty emails after these type of webinars, because people get scared, you don't actually need to be a perfect trader or investor. You can make plenty of mistakes because 95%, if they don't understand what's going on, they just freeze and they do all types of mistakes, right? So you don't have to be perfect because trading a volatile market, it's not easy, right? You don't have to be perfect. You actually only need to be slightly better than your counterpart, right? To do well. And that's basically the main message, right? You don't need to be an expert like in our community, David. he tenfolded, and now with the recent rise, he's probably at 15 or 20-fold. He just traded plain options, right, without being an options expert. So if you're committed, if you know what's going on, if you see the potential in the charts, stop run levels, and potential stop run moves, you can make a lot of money, right? So it's about not getting scared or being scared. It's actually you can enjoy it, right? As traders and investors, I mean that is a trader's dream, as bad as it is, but it is a trader's dream, and that's a huge, incredible ride to come. We already started it, but that's not the end. There's much more to come. Well, that's the end. I mean, you all know that I'm teaching 2 workshops, Forex in March and futures in September, and that there are two open slots for the Forex workshop in March with a 40% discount. So if you're interested, come and join. I would be very happy. Apart from that, let's open it. Let's open it to Q&As. Are you surprised? Are there ahas? Are you scared? Did you know all that? What is the feedback? What are the questions? Did you like what you hear? Or are you scared of what's coming?
A bit of both for me.
Yeah.
Yeah. So definitely less afraid. I think it's maybe the third time I've heard you talk about this topic. And becoming more accepting, there is difficulty in the world, and there is opportunity, and it's okay to profit from it while acknowledging that there's, difficulty going on. Yeah. So it's sobering, but also exciting is what I've moved to.
Yeah. Exactly. Yeah. Well, that's how I see it as well, right? It's a bit sad seeing how things develop, but as traders, there's a lot of opportunities, right? And that's what we should capture, yeah, without feeling bad about. Carsten, I think some people hear the output but focus on the immediate. Absolutely, yeah. Like when US dollar collapsed on Friday, pushing US yen down also, yeah. A lot of people are feared about the immediate. And it's very important. This is not immediate. This takes 10 years, right? And it's a grind. It's getting stronger and stronger and stronger, right? So we're actually looking for something like that, right? It starts slowly. The precious metal slide increases. We're still in the beginning slope, right? This is going to increase, 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 and it's not a sudden thing. Yeah. Okay, Jim. Some ahas for you. You're part of the Forex workshop, right? Jim, yeah. Good.
I am, yes.
Yeah, great. Okay, Eric, would you recommend trading your top and bottom currencies in the futures of Forex market? Okay, yeah. Yeah, there are currency futures, right? You can trade currencies with futures as well, but in any way you want to do a chart analysis on the Forex charts and not the currency futures, because currency futures make only like 2% of the volume and you get false signals. But you can execute with a currency future, trading a Forex pattern. Yeah, Eric, you can do that, yeah. Yeah, Carsten, yeah. Okay. Okay. This was a bit a longer call than usual, right? More than an hour. So I hope you got some ahas out of it. I hope it cleared the things. I hope you're looking at what comes up next with a little bit different view, right? So Van talked about a lot about that, about the beliefs. Having a belief, it's just like putting glasses on, right? Like different colored glasses. And if something has changed here in your belief set, well, you will look at the markets with different glasses, right? And probably you'll understand more what is going on, and you will have more commitment, right, to act and do the right things. You don't have to be in every move, right? And you will miss a lot of moves. But if you catch one move like silver, uh, it can make you financially free, right? And there will be many moves of that sort. And silver is not at the end yet. Like at the end of the decade, I'm seeing silver well above 200. I think 250 is the target. And that's true for everything else, right? Natural gas should all rise, including stock indices. Okay. Let's see. Question? Bonsoir. Hi. A consequence of governments defaulting on their debt, there will be a lot of wealth destruction, so that money will not be able to invest in other asset classes. Well, there will be wealth destruction from the bondholders, right? Pension funds, insurance companies are typically bondholders that actually need to invest in bonds. They will suffer, yeah. And probably there's a lot of money printing to keep them afloat, right? Pension funds and insurance companies, etc. This money gets drawn out of the system. It gets deducted. That's true, but money printing will not stop. And once bond investors get scared, and once they start to divest, well, diversify, sell a little bit, and put it into something else, well, this will create a lot of money for other asset classes. Michelle, it's disturbing what's happening in America now. Well, it's not only America. Politics is a global thing. Trump is just honest enough to speak out bluntly. Interesting. What is driving the strange Venezuela and Greenland activity? Interesting. Yeah, that's my opinion. I might be wrong, but I think it is. Yeah. Okay, brilliant and clear view. Once again, Carsten, thanks. You're expecting silver to stabilize, go higher or drop in the shorts to immediate term. Yeah. Well, silver is the problem. It's way overextended, right, on the higher time frames. So basically, I've already sold part of my position. I've got a long-term position, like for 15, 20 years. I sold part of it because it can pull back, right? Can pull back from 100 to 50 easily. And that's just a pullback because it's heavily overextended on the higher time frames. And it might then consolidate for years, right? For 5, 6 years on a lower level, while other contracts are bubbling. So you need an exit algorithm. Right now, I wouldn't get in, right, into zero because the move is done, right? It can turn around. The stock run move is basically over. Well, now we are touching the 100 psychological number. That's another stop run level. So we might get another push. We could get to 120, right? Should there be a war going off, it could go even higher. But at some point of time, well, we will drop. We'll drop massively, right? And come back to the moving averages. And that's around $50 per ounce. Uranium. No, I don't have a view on uranium, but if you show me a chart, Pat, you're in the master's program, send me a chart on uranium because it's not available in TradingView, I think. then I have an opinion about. Yeah. Okay, Eric, you wanted to see the list of currencies again. Okay. Any other question? Take a look at the list. This is it, yeah. This comes from looking at the higher time frame patterns, right? And identifying, okay, if I look at the pattern, and if it produces a move, right, in line with the pattern, a bullish pattern should move up. Well, this is how I came up with the top four and the bottom four. It's purely higher time frame patterns. Okay. Right. Well, this is recorded. I'm going to send out the recording tomorrow, and next week on the newsletter. I'll send it out as well to everybody. Okay. All right. Thanks a lot.
Thank you.
Have a nice weekend. Take care. Bye.